0. Okay, 2660. 15,200 is January sales. 0.7 is 70% credit sales. 0.25 is the credit sales you collect in the same month. Now, when it comes to the next month, the 50% one that you collect in January, you'll actually get that from the December sales, right? December 11,200 sales, because you're collecting in January 50% of the credit sales you sold in December. So again, December for January collections, 11,200 multiplied by 0.7 multiplied by 0.5 this time, because we get 50% in the month of sale. So 11,200 multiplied by 0.7 multiplied by 0.5 gives us 3,920. Okay, 3,920. That's the December sales. 70% is the credit sales. 50% is what we collect in January from December sales. And then the 20% is 2 months after the sale. So we're going to look here at the November sales, right? Because 2 months after, you got November, December, collect in January, that's 2 months after. So the November sales were 16,500. Then we've got the 0.7, then we got the 0.2, 20%. We collect 2 months after. So 16,500 multiplied by 0.7 multiplied by 0.2 is 2310. So that goes in here, 2310. All up, the cash collected in January, add that column up, 13,450. Okay, so that's just what you do, all right? So in other words, when we do February cash collections, right, same month, so February is sales of 13,200 multiplied by 0.7 for the credit sales, multiplied by 0.25 for the February cash February credit sales. So 13,200, which is total sales, multiplied by 0.7, which is credit sales, multiplied by 0.25, which is what you collect in the month of February, same month, 2310. So that's 2310, and then you just work through those calculations. So if we work it all the way through, just following that, we'll get 5320 here, 1568 here, total being for February cash collections 13,158. March 4320, we've got that. Same month, March, we collect 25% of March credit sales, so that's 2520. 50% of February sales, so that's 4620. 2128, total 13,588. And then for the quarter, 12,840 we've got, and all you do is add these three across. So you get 7,490, 13,860, and then 6,006 for a total of $40,196 for the cash collected for the first quarter from credit sales and cash sales, and according to each of those months. So that's question 6 out of our test 10 questions. Okay, so just have a quick look there. Okay, question 7. All right, clean the board. Question 7. It says, Finley Corporation is preparing its cash payments budget for the month. next month. The following information pertains to the cash payments budget. So we're looking at a cash payments budget. Okay, so they tell us some information here. I'm just going to run down the list. The cash payment for direct material, okay, direct material is $39,000. That information is coming from, it says last month's direct material purchases were $78,000, while the company anticipates $88,000 of the direct material purchases next month. Okay, so 50% of direct material purchases in the month of purchase and the remainder in the following month. So 50% of 78,000 is 39,000. When they say last month's direct material, they really should say this month, okay? Because they say last month and they say next month, but there's no this month. They really mean this month. Okay, so that's 39,000 for this month's purchases, and then next month's purchase is 44,000. Okay, so what they've got is that's last month in the solution, then they've got next month. Okay, just to help you out there. Cash payments for direct labour. They tell us the direct labour is budgeted to be $35,000. Put that in. Then the cash payments for overhead. Okay, and they tell us in the information, overhead's estimated to be 150% of the direct labour cost. So if you take your $35,000, multiply it by 1.5, that gives you the overhead in total, $52,500, but $10,000 of that is the depreciation on the plant and equipment. So we subtract the $10,000 to get $42,500. Because this is a cash payments budget and we don't pay for the depreciation. Depreciation is the allocation of the cost of an asset over its estimated useful life, and we don't pay for that in cash. We don't write a check out for depreciation. So it's $42,500, which is a $35,000 multiplied by 1.5, subtract 10,000. Okay, then we got cash payments for the operating expenses. All right. It says monthly operating expenses to be $49,000. So we put that in our calculator, 49,000, which includes 2,700 of depreciation. So we subtract that. And $1,700 of bad debt, we subtract that. Bad debt is for sales on credit that you don't collect the cash for, so we don't actually get cash for that. And it's called bad debt expense because in effect we're paying for the sales that we don't collect the cash on. So it goes in the income statement, it's an expense, but it's not a cash outlay. So we end up with, in our calculator, $44,600 for the cash outlay. And then we just got the payment for taxes, $8,600, for a total up of $213,700. So that's the answer for the total cash payments required in question 7. Okay. All right. 213,700. Question 8. Question 8 says, say Company Services has $8,600 cash on hand. The company requires a minimum cash balance of $7,500. In other words, they need to have $7,500 in the bank account all the time. Okay. May cash collections are $548,480. Cash payments $563,420. Prepare a cash budget for May. All right. So cash budget. Okay. We start off with the beginning cash balance. Okay, so we'll just put beginning, and that's going to be $8,600. They tell us that in the information. Add the collections, right, which you get from a collection budget. if you were doing it for the business. That's Talus, it's 548,480. 548,480. Okay. Total those together, 557,080. That's the total cash available. Right, available. Subtract your payments. Okay, and that's 563,420. Therefore, you have a deficit or a shortfall of 6,340. Okay, I'll call that a deficit. Some people might call it a shortfall, but you're $6,340 overdrawn. Now you want to have a minimum cash balance of 7,500. Okay, that's the minimum cash, 7,500. So you're short 6,340. You've got to go borrow another 7,500 to get it up to 7,500. So in fact, what you have to do is go and borrow $13,840. Okay, that will be the amount that you need to borrow. Because you've got to take that $13,840, pay for all your bills, and if you do that, you'll end up with the $7,500 in the bank as you want, right? $7,500 deposit or balance in the bank account. That's question 8. Question 9. What we have to do with question 9 is prepare the production budget. Okay, so we did one of these before with number 3. We'll do this quickly with number 9. It's in quarters, quarter 1, 2, 3, 4, and then a whole year. Okay, start with your sales in units. Quarter 1, 152,500. Then it says plus the desired ending inventory, which is 30% of quarter 2 of the next month's quarter. So 54,450. Add that to 206,950. Subtract your ending inventory. Say it again. Subtract your beginning, right? So this is add the end inventory. That gives you what you need. Subtract your beginning inventory, which is 45,750. That is 30% of the 152,500, and that tells you what you need to produce. Okay, produce, which is 161,200. Okay, quarter 2. I'll just run down the list. 181,500. Then you've got your 63,900. That gives you 245,400. Right, then your beginning, remember that's the beginning of the month is the end of last month, so 54,450. And that gives you 190,950. Okay. Quarter 3, you're going to have at the bottom here 197,250, and quarter 4 you're going to have 179,250 there. Okay. All right. For a whole year, units to produce will be 728,650. Okay, 728,650. Now, next one, which is question 10, is the last one. It's a cash collections budget again. I tend to emphasize the cash collection budgets and the production budgets. They're the ones that I like students to come to understand. Okay, so question 10, cash collections budget. Alright, we have got to do it for January, February, March in the quarter. So Jan, Feb, March, quarter. We've done it before, so same layout. You got your cash sales. Right, now your cash sales for January for this business, they had sales altogether of 145,000. I'll just do it here, 145,000. You got your 40%, because it says 60% of the sales are credit sales and the remainder are cash sales. So you got 0.4, 145,000 times 0.4 is your 58,000, okay? So the 58,000 goes here. Then you got to deal with your credit sales, okay? And with your credit sales, you've got 25% in the month of sale, 50% in the month after, and 16% 2 months after that. And any cash after that, you're not collecting from sales. All right, so just run down the list. You're going to do your 145,000 for January, multiplied by 0.6 being your credit sales, multiplied by 0.25 being what you collect in the same month. And so you end up with 21,750 here. Okay. Now in January, the month after, you're going back to your December sales. Okay, so you're going to collect 50% from December sales, and it tells you that your December sales were 115,000 multiplied by the 0.6 multiplied by the 0.5 34,500. And then for your January cash collections 2 months after, that's from November. Okay, and November sales were 90,000. Once again, multiplied by 0.6 for the credit sales, and then multiply this time by 0.16 because that's what they collect 2 months after. So 90,000 multiplied by 0.6 multiplied by 0.16 equals 8,640. And so you put your 8,640 there. Total up January, that's 122,890. Okay. All right, then you do February, March, the quarter. And if I just tell you the whole quarter, right down the bottom here, what you're looking for is a number of 396,600. You've got 123,290 here and 150,420 there, okay, for the individual months. Okay, so I'm going to leave it at that, and I hope that helps you, and I'll just see you next time. Okay, bye.